silver price has been managed by China. Silver jumped from $50 in I think it was early October, all the way up to 120.
The launch of Hong Kong's central clearing system for gold will create a historic foundation, allowing us to take the next major step. The Silver Institute projects the market will remain in structural deficit for a sixth straight year here in 2026, with mined silver production expected to rise only modestly, around 1%, according to some forecasts. Surely we're reaching the point where the physical supply-demand imbalance has to trump paper speculation. Would you agree with that?
Yeah, I think you've got to, people have got to understand actually what's been happening with silver. The Silver Institute is right. I mean, you can draw up supply, demand, surplus deficit type charts as much as you like. But actually what's been happening is that the silver price has been managed by China. China is it's the largest importer of the sources of silver, which are non-ferrous ores, particularly copper, zinc, to a lesser extent lead, and also gold. That's where it all comes from. Over 70% of silver comes from that. And as a result, basically China has been accumulating huge amounts of silver for a very, very long time. It's part of official policy, not publicly declared. They don't go out and tell us this month we bought this month we refined so much, and that produced so many tons of silver. No, of course they don't. They don't tell us what's going on. But believe you me, the policy going back to 1983 has been to accumulate gold and silver. And the PBOC has total responsibility for the acquisition of gold and silver. Now, what's happened is that in the last however many years, when you've got this deficit, which quite correctly comes out of the Silver Institute's tables.
Think about what just got laid out here. A policy shift that most Western analysts never saw coming, quietly reversing years of price suppression almost overnight. That's the kind of structural, behind-the-scenes move that headlines rarely catch until it's already reshaped the market. If breakdowns like this are helping you see past the surface-level price charts, hit subscribe and turn on notifications. We bring you conversations with analysts who dig this deep every single week.
That has been made up by China exporting silver to satisfy demand. Why? She's been keeping the price of silver under $50. So, and then this changed. This changed sometime, I would guess, in late September, early October, probably late September, along with rare earths. The rare earth story had been brewing up for a little while. But quite clearly, China was not going to export silver for America, which had then decided it was a critical mineral to supply America. So what did she do? She reversed her policy. And we saw silver jump from $50 in I think it was early October, all the way up to 120. And if you look at what China has done in the first quarter of this year, she has bought a total, I think the figure is 1,626 tons. Now, we haven't been given any export figures because usually there's imports and exports. But for some reason, there hasn't been any export figures, if you like, issued. Now, this 1,626 tons annualized, we're looking at about 5,000 plus tons. Now, this, if you like, compares with the roughly 3,000 to 5,000 tons which China has been exporting every year recently to satisfy and to deal with that supply deficit in the West. So in other words, this is a completely volte-face. And it's fascinating that she has acquired all this silver at a time when we've been trying to get the hell out of it. This is part of a wider policy, actually, because at the same time, China has imported 163 tons of non-monetary gold. That was up to May. We haven't had June's figures yet. And on top of that, there's a further 40 tons recorded of non-monetary gold. So that's in addition to the 163. So around about 200 tons gold. And that's what's been reported. I mean, it could be, the truth very often in these things is somewhat different. So what's she doing? What's she doing with stockpiling copper? What's she doing, sort of ceasing exports of things like fertilizers and sulfuric acid and so on? I mean, the answer to this, quite simply, is she doesn't want any dollars. Her trade surplus is now hitting records. So she's earning foreign currencies, which she knows are going to go to zero. She doesn't want them. So if you like, you could put it that China foresees a situation that's not prices rising, but the currencies falling. And she's indulging, if you like, in a central bank's version of a crack-up boom, which for people who don't understand what it is, I mean, this was something that the economist Ludwig von Mises wrote about because he experienced the demise of the Austrian shilling and also observed the demise of it was the Austrian crown in those days. He also evidenced the hyperinflation in Germany, which lagged the Austrian one just slightly. And he observed that around about the last 5 or 6 months of this, this collapse of the currency, people suddenly realized that it wasn't prices rising, but the currency going down. Now, the moment they realized that, they dumped the currency for anything, just to get rid of it. They bought anything, even if they didn't need it. They just wanted to get rid of wheelbarrow loads of this rubbish. And that's precisely what China is doing.
Now, correct me if I'm wrong here, but I believe China is the #1 gold producer and the #2 silver producer in the world. So while a lot of people are paying attention to the import-exports, is China officially reporting all of the silver and gold that they're mining? And how much of that do you think they're taking into their own reserves as opposed to exporting to other countries?
Well, I mean, the answer, I've always maintained that with respect to gold, China is like Hotel California. You're welcome to come in, gold ingots, but you ain't leaving, if you see what I mean. So on that basis, it's really, anything that she's mined, she has kept. So you can add that, if you like, to the balance of, exports, imports. I mean, there have never been any exports. But interestingly, in the last week or two, it's become evident that that is changing.
Notice the timing here. This restriction easing happened within just the last couple of weeks, right as a brand new institutional gold market was coming online. That's not a coincidence worth glossing over. It looks a lot like infrastructure being quietly built for something much bigger than routine trade flow.
What happened is that the People's Bank of China issued a note saying you no longer need to ask our permission, the central bank's permission to export gold. It's just a customs matter. What that means is that people owning gold in China can send it from China to Hong Kong as part of this new market. I suppose they can send it anywhere, but it's still got to go through customs. So I guess that they'll probably restrict it to this new Hong Kong, if you like, market development. So you've now got freedom of movement in gold between the Shanghai Gold Exchange and the new Hong Kong market. So that is a big, big change, and that's happened literally in the last 10 days or so.
Yeah, I want to touch on that because Hong Kong has launched a new gold clearing and settlement system. At least 6 major banks signing on, including JP Morgan, Deutsche Bank, and many others. Hong Kong's chief executive, John Lee Ka-chiu, stated, "The launch of Hong Kong's central clearing system for gold will create a historic foundation, allowing us to take the next major step, and that's building a comprehensive gold trading ecosystem. If gold is the world's safe haven, Hong Kong will be its safe harbor." Very interesting development. What do you think it means for the global gold market as well as the gold market within China? You've alluded to it, but would love to get some more thoughts from you.
Yeah, it's quite simple. You've got to look at this in connection with earlier moves that the People's Bank and the SGE have done. Bear in mind, the SGE is owned and run by the People's Bank. So, when we talk about the People's Bank and the SGE, we're really talking about one organization. What they did was they opened a vault in Hong Kong, which was an exchange facility, if you like, for gold for Chinese yuan or Chinese yuan for gold for anyone. And it all fits in with the new payment system, the CIPS payment system, which they've put together. And they've also, interestingly, been opening another vault in Saudi Arabia. And there's talk about these vaults new vaults being opened in Southeast Asia. There was stories that they would probably open one in Dubai, though events have rather overtaken that. And there was even mention, and I think it was probably a bit speculative, that they would open one in Zurich. I mean, the point is that right from the outset, China realized that fiat currencies never, ever survive. She was emerging from the Mao era into a world of fiat currencies. They weren't going to survive. So what she had to do was to play the fiat currency game, but never forget she needed to protect herself against their collapse. And this has been her policy the whole way through. She, between 1983, when the People's Bank was appointed with responsibility for the entire nation's gold and silver reserves, I mean, I'm not talking about bank reserves, but ownership of gold wherever. 1983, she started accumulating gold in that big bear market. I reckoned, and I did some calculations, it was very much a back of the envelope type calculations, but I reckoned that at contemporary prices, she probably accumulated around about 20,000 tons by 2002. The reason 2002 matters is that the Shanghai Gold Exchange opened, and for the first time, citizens in China were allowed to own gold. And indeed, I think 4 or 5 years later, the Chinese government even advertised, they did television adverts, buy gold, it's good for you, whatever the strapline was. So you can see that there's been a deliberate policy here. They've also, as you alluded earlier, they accelerated mine production. Very, very significant.
Here's the bigger pattern worth holding on to. This isn't a reaction to this year's headlines. It's the continuation of a strategy that's reportedly been running quietly for decades. When you zoom out that far, a single policy announcement stops looking like news and starts looking like the next step in a much longer plan.
To the point where they rapidly overtook South Africa, which admittedly was declining in its output, and has been the world's largest gold output, miner, if you like, by output, for, I can't remember when the crossover was, something like 2007, 2008. So that's been, sort of almost 20 years she's been the largest mining nation. And then we have seen this continual migration of physical gold from Western capital markets into China, never to return. So my guess is that she's probably, as the state accumulated a further 20, maybe 25,000 tons. And of course, you've also got the deliveries out of the Shanghai Gold Exchange, most of which has gone into jewelry, admittedly, into the hands of the public. That is a further 28,000 tons. We don't have scrappage figures, but anything that's scrapped has gone back into the SGE, vaulting system, and would have, it hasn't left the country, so it's still there, sort of thing. So that 28,000 tons, some of it may be owned slightly differently. And of course, the other thing is that the banks, on behalf of their customers, Bear in mind, banks actually don't like to own physical things. They like paper. But on behalf of their customers, acting as custodians, they will have also acquired significant amounts of gold, which will be within the SGE vaulting system and therefore not recorded as delivered anywhere. I reckon there's probably another 5,000 tons there. And bear in mind also that they offer gold accumulation accounts. And these gold accumulation accounts run alongside deposit accounts. And the People's Bank of China's policy has been to reduce interest rates, in the wake of the property smash and all that sort of stuff. And so while the banks have been very imaginative with, trying to sort of offer deposit products, with sort of slightly higher rates, if you hold on to your deposit for 3 years, that sort of thing. The fact of the matter is that once gold starts running again, you can see that this is going to unlock huge investment demand from ordinary savers. And bear in mind that in China, the savings ratio is about 30%. Now, I'm looking at household savings, not overall savings. Household savings running at about 30% of GDP. That's the equivalent of between $5 and $6 trillion every year trying to find an investment home. In a world of declining interest rates in China anyway. Property used to be very fashionable, but no more. Stock market, yeah, maybe some interest there. But you can see where this $5 or $6 trillion is mostly going to go to. And this is one reason it's interesting that in the recent changes, the domestic market has been told to stop speculating. But guess what? ICBC, I think it was reported to be reducing its expense ratio, its expenses, if you like, on the gold accumulation accounts. In other words, encouraging real investment, but discouraging speculation, which is a fascinating topic.